Hello everyone and welcome to today's session. So today what we are going to do, today we are going to cover chapter 17 and 18 in detail, okay? And once we cover the chapter, we will discuss the questions of that particular chapter. But for this, I expect that you might have already seen that the lectures which are already uploaded on the portal. So these are the summary lectures, and I understand that you guys have already gone through the lectures which are uploaded over there. Okay, so let's proceed with today's session. Now, chapter 17, that is due diligence, investigation, and forensic accounting. So these are the three terms that encompasses the chapter: due diligence, investigation, and forensic accounting. Okay, what is a due diligence basically? When I talk about due diligence, what is due diligence? Due diligence is nothing but is kind of an investigate and evaluate a business opportunity. When I talk about due diligence, it is kind of evaluating a business opportunity or a business for a particular merger transaction, demerger transaction, or for the particular transaction which is like compromise or arrangement or something like that. Now, when it comes to the due diligence is used to verify the opportunity, to investigate the opportunity, agreements, asset, liabilities, IPs. A lot of things are there which are involved in it. Okay. So due diligence is a kind of a tool you can understand which is, performed or done in order to gain comfort for the investors. Like if someone is investing in a company, let's say X is investing in a Y company, then X will carry out a due diligence or he'll appoint someone to carry out a due diligence, okay, of Y company. And then based on that, he may, identify a few things that he may want to take up for the purpose of, a discussion or negotiation of the terms and conditions of the transaction. So you can understand due diligence as a tool. Now, what is the difference between due diligence and audit? Can anyone tell me the difference between due diligence and audit? Anyone? Difference between due diligence and audit? Pretty simple, straightforward. Very good, Abrakesh. Yes. Okay. I'll go one by one. When it comes to the purpose, basically, okay, when it comes to the purpose, the statutory audit provides an independent opinion. Okay. The statutory audit is to provide an independent opinion on whether the financial statements are prepared in accordance with the applicable accounting standards and they present a true and fair view. Okay. So here the purpose is to issue an opinion on the true and fair view of the financial statements. But when it comes to the due diligence, it is to investigate and evaluate financial, legal, operational, commercial aspects of a business transaction, okay, or a business to identify potential risk and opportunities for the buyer or the investor. So here it is for the buyer or investor and for his identification of opportunities and risk in the transaction. Now the scope between audit and due diligence. When I talk about audit, the scope primarily focused on financial statement, general purpose financial statements, notes to accounts, and any explanatory information to those particular general purpose financial statements. But when I talk about due diligence, it's a broader scope. It covers financial information, non-financial information, legal document, contracts, intellectual property, customer relationship, operational processes. A lot of things are involved which are over and above your audit scope. Okay, and which may not be restricted to a particular year, Unlike in audit, you have a audit for a particular year, but in due diligence, you may carry out the due diligence for depending upon the transaction, maybe 2, 3, 4, 5, or whatsoever years. Timing. Due diligence is kind of conducted before transaction, whereas audit is conducted annually. So in due diligence, you don't have a timing per se. Regulatory requirement. Audit is required as per Companies Act 2013, but due diligence is not mandated or anything in required as per the regulation. It is dependent upon the investor. Then comes the standard part. Like for audit, we have the auditing standards, Ind AS, okay, issued by ICAI. But for basically due diligence, there are no specific set of standards that can be followed or that are required to be followed. Again, you have a predefined format of reporting in audit, but in due diligence, you don't have so. Audience. Basically, the audience, or you can say the addressee or the stakeholders of the audit report are the shareholders, regulators, creditors, banks, financial institutions, like that way. But for the due diligence report, primarily it is intended for the buyer and the investor only. So it is for the buyer and the investor. So this is the basic difference between due diligence and audit. Why I provided this difference? So that you can get an understanding that how due diligence is different from audit. Clear? Any doubt till now? Okay. Now, what we need to further understand is type of due diligences. Okay. So there are multiple type of due diligences which can be performed based on the type of transaction. So basically, if I talk about one is a commercial and operational due diligence, which is generally performed to understand the commercial side or the operational side of the transaction or the entity. Second is the financial due diligence. It is just like an audit, but in a broader scope. Much more scope is there compared to the audit part. Tax due diligence. It's a separate due diligence exercise carried out to identify the tax implications on the transactions or proposed merger or investment or any such transaction that is being happening. IS information system due diligence is the one to identify basically like what systems are being used, what is the IT infrastructure of the company, can it be combined with the existing IT infrastructure, and a lot of things are there in IT due diligence. Then you have a legal, environmental, personal. So these are the type of due diligences that are carried out in order to provide the comfort to the buyer or the investor, or to identify the risk for the buyer and the transaction. Why we call it due diligence? Reason because when you use the term due diligence means in-depth analysis. That's why the term not only diligence but the due diligence is used. Okay. Now, any doubt till now? Any doubt? Okay. So let's take one question and then we will proceed further. Very good question. Let's understand this one. Global Tech Industries, a multinational technology conglomerate, is considering acquiring Innovate Solutions, a promising Indian startup specializing in artificial intelligence applications. Global Tech has engaged a team of chartered accountants from a reputable Indian firm, okay, to conduct a comprehensive financial due diligence on Innovate Solutions. The CA team has been tasked with assessing the financial health, risk, and opportunities associated with the potential acquisition. Provide the areas that the CA team should address in their investigate of Innovate Solutions. So here, the due diligence is required to be performed, okay, for the purpose of uh, comprehensive financial due diligence, for the purpose of, to identify risk opportunities associated with the potential acquisition. Now, you as a team should address, what areas you will look for, areas that the CA team should address. You need to answer from that point of view. Okay, what are the areas that you will address in the case of financial due diligence? Okay, so tell me, what are the areas that you will address over here? Come on. What are the areas as a CA team you should address, okay, to understand the potential acquisition or to understand this transaction? Come on, guys. This is the basically, you can say, a financial due diligence. Okay. And accordingly, you need to consider the areas that you will verify. Okay. In a financial due diligence. Very good, Abhirakesh. Yes. Anyone else? Anyone? Okay. Yes, Abhirakesh. Good. Very good. Anyone else? Any other answers? Okay. Good. So, when it comes to the financial due diligence and areas that I need to look into the financial due diligence, okay, the first area that I need to see or that I am, required to look into is my financial statements or financial history, basically. Okay, because this is something I need to first understand historical financial performance. So you can say historical financial performance is the first area that I will look into. Now, what I will look into in this area is I will see the audited financial statements. Okay. I will look into, past 3 years, 5 years audited financial statement, revenue growth. Then you have a profitability, free cash flow, etc. So you will see a lot of things in this. You will scrutinize the revenue recognition policies, for long-term contracts, or, how the company recognize the revenue. You will investigate significant fluctuations in the revenue, inconsistencies, and based on that, you may perform ratio analysis. So, ratio analysis or data analytics. Okay. And based on that, you will perform more investigation. The second part that you will look into is current financial position. What is the current financial position of the company? For example, you will evaluate the company's liquidity position, cash on hand, receivables aging, okay, inventory turnover, key ratios like, DSO, DPOs. Then you will review the company's current liabilities, net worth, accounts payable, its quality, and, other contingent liabilities, legal liabilities that the company already has. Third, You will focus on accounting policies, okay, and practices. For example, I will see, okay, what company does, what company makes, what is the company's accounting policies, okay, what kind of revenue company generate. I will see whether the company is following Ind AS, IFRS, AS, what is the, financial reporting framework that is being followed by the company. So all these things I will verify: related party transaction, how the company is recording related party transaction, tax compliance. So all these things I will, verify in this particular area. Then comes the fourth area, that is tax compliance. So I will verify, income tax returns, ongoing tax disputes, litigations, okay, assessments that are going on, any liability or demand that is required to be paid by the company, all those things. Then fifth is management's future projection, which may include, sensitivity analysis, projections, okay, trends, like, okay, what is going to be, the company's estimated revenue for next 5 years, how the company will grow, everything I will assess, so that, by that way I will be able to understand what is the worth of the company, how much company actually, spends today. Okay, so this is something I will verify as a part of my financial due diligence. I hope I'm clear. Any doubt? Any doubt, guys? No? Okay, if no doubts, let's take one more question on the similar line. But this time I will provide you what areas you need to look into, but you need to give me what you will look into in these areas. So let's understand. Pharmacare Limited, a leading Indian pharmaceutical company listed on NSE or BSE, is considering a merger with the Health Tech Innovations Private Limited, a fast growing startup specializing in digital healthcare solutions. Pharmacare has engaged a team of chartered accountants to conduct a comprehensive financial due diligence on the health tech to assess the potential risk and synergies of the merger. Considering the objective of the due diligence process and the unique characteristics of the both companies, elaborate how the CA team in their investigation of health tech should address the specific areas like financial performance, accounting policies, regulatory compliance, intellectual property, and potential liabilities. So you have, like, okay, which areas you need to cover, but you need to tell me how you will cover these areas in your due diligence. Okay, so tell me that one by one. Let's start with the financial performance. How you will cover this particular area and what you will do in this particular area. We just now discussed on a similar lines. Come on, guys. Come on, guys. What you will see in this? Let's say financial performance. So what you will look into the financial performance area? Come on, quickly. Okay, Abrakesh, good, very good. What else? So when it comes to the financial performance, as I told you, we discussed just now, I will analyze the financial statement for past 3 to 5 years, focusing on the revenue growth, profitability, cash flow, what is the burn rate, like, burn rate when it comes, how much fast they are burning the cash. If it is startup, so, burn rate is a very important key element. Scrutinizing the company's revenue model, like how the company is generating revenue, subscription fee, license agreement, advertising revenue, or what is the main source of the revenue? How they are going to, basically increase that particular revenue in the future. Evaluating the reasonableness of the, company's financial projection. Let's say, for example, company is projecting, no, 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 in next 5 years, we will be the top company in the segment because we are the right now startup, but next 5 years we'll be in the top segment. How? Why you are projecting that thing? Okay, what is the basis of that projection? Okay, considering the market size, competitive landscape, regulatory developments, then funding history, whether you have received any funding or equity investment, who are the owners of the company. Either you are a debt driven company. If you are a debt driven company, then whether you pay huge interest on the debt. So how the funding sort of things or capital works in the company. So this is the first part that I will verify, that is a financial performance. Accounting policies we are seeing. Okay, can anyone tell me on the regulatory compliance, what you will check in the regulatory compliance? Regulatory compliance. Come on, guys. Regulatory compliance. What you will verify in the regulatory compliance? Yes, very good, Abakesh. Yes. Come on, guys, quickly. Come on, quickly. What you will verify in the regulatory compliance? So in regulatory compliance, I will verify the following items. One, if I talk about is the compliance with the healthcare regulations. See, always draw reference from the question. Here in the question, the references of healthcare companies. So I will check first of all the compliance with the healthcare regulations, privacy law, medical device regulations, or clinical trial regulations, something like that. I will check for any potential or pending litigation with respect to the regulatory compliance. I will assess companies' risk management process for addressing regulatory changes and the potential compliances. Okay. So this is how I will verify the regulatory compliance. Now let's talk about the next part, intellectual property. How will you verify the intellectual property? What you will do? Let's talk about intellectual property. So in intellectual property, what you will verify? Come on, guys. What you will verify in intellectual property? Come on, quickly, guys. So when I talk about intellectual property, I talk about identifying the intellectual property assets that the company hold. For example, patents, trademark, copyright, trade secrets. Okay, how strong the or valuable the intellectual property rights of the company are. Okay, for example, some intellectual property rights, let's say for example you have a patent which is registered in India but not registered outside India, or trademarks or copyrights which may be registered in India but may be in conflict with the other trademark and copyrights out of India. So the strength and enforceability of the company's IP, okay, that is something I will verify. Then it comes to the licensing arrangement, collaboration with the intellectual property rights, and all kind of arrangement that are there. For example, if I have I'm getting royalty and I'm allowing someone to use the IP that I have, so those arrangements also will be falling part of this particular area. Clear? That is something I will see in the IP area. Now let's talk about the next one is potential liabilities. Okay, potential liabilities. So what you will look into the potential liabilities? If I give answer in just one word, it's just like contingent liabilities. That is. So potential liabilities is nothing but a contingent liability. So whatever we discussed in last question on the contingent liability, same will be here also. I hope now you guys have understood how and what is required to be done in a due diligence. Any doubt till now? Any doubt? So these are some areas that we verify in the due diligence. Okay. Now, if you see, these were certain areas, but if I talk about more areas, like it includes, okay, brief history and the history of the target company, review of the financials, accounting policy, taxation, cash flow, management and employees, financial projection, or statutory compliances. These are certain areas, okay, which are included in your financial due diligence. If you want to conduct a full-fledged financial due diligence, you will include all these areas in your due diligence. And out of this, we have already seen accounting policies, we have seen financial projections, statutory compliance, we have seen review of financial statement. Okay. But let's understand the remaining part is the brief history of the target company. Okay. And other areas. And this is we'll do by understanding one more question, by taking up one more question. Greenleaf Energy Solutions, a well-established Indian company specializing in renewable energy products, is exploring the acquisition of Solar Tech, a newer entrant in the solar energy market. Greenleaf has tasked a team of chartered accountants with conducting a thorough financial due diligence on Solar Tech to assess the feasibility and potential risk of the acquisition. Develop a comprehensive plan that should help the CA team to address the area pertaining to the brief history of the target company and the background of its promoters. So you need to develop a comprehensive plan to target this particular area, that is a brief history and the target of the target company and the background of its promoters. So how will you do that? What will you verify in this? If I tell you that, okay, go and verify the brief history of the target company and background of its promoters as a part of a due diligence, what you will do? What you will verify? Come on, guys. Pretty much easy. There is nothing difficult in this one. Trust me. Pretty much easy. Come on, quickly. Okay. Under okay, good Abharakesh. What else? Come on, guys, quickly. What you will verify? What you will verify over here? When I talk about brief history of the target company and the background of its promoters, what you will do in that? Anyone? Come on, guys, quickly. What you will verify in this? Okay, I'll tell you. So, what I will verify basically over here is that I will first understand. Okay, I will first understand the company's evolution from the inception. For example, how company started, who were the original owners, whether there was any, takeover by any person during the year. Okay, whether it was, like kind of, any, takeover acquisitions, merger, demergers happened in the past. Okay, reputation of the promoters, who are the promoters. Okay, what they do, how they much stand in the market, so that is something first I will verify. Then I will verify the nature of the business and the operations. What kind of business the company operates, the nature of business. Okay, primary business activities. Okay, assessing company's market share, location of the company's manufacturing plant or the distribution, capacity of production. Okay, company's employment structure, like how many employees they have, how they operate, everything from that point of view. Then i will I will see PSM, that is product, service and market. Means product portfolio. Okay, what is the product portfolio of the company? Then when I talk about service, like what services company provides, and what is the market the company targets, that PSM model I will verify. I will verify the key supply chain relationship, asset liabilities of the company, expense categories, and how much they invest on the R&D, and how much they have invested on the R&D in the past. Okay, what was the past image of the company, for example any past major litigations or issues that were highlighted or that were there in the market, for example any fraud, any scam, or some misconduct by the company that was done in the past, and that is still kind of has impacted their image, so something like that. So all these things I will identify or understand in the brief history of the target company and the background of its promoters. Any doubt? Any doubt? No? No doubt? Okay. Uh, if no further doubts, let's proceed further and understand, like, this was one of the area with when it comes to the a brief history. Okay, but there are other areas also that are required to be considered. For example, when it comes to the the management and employees, cash flows. So all these areas, are required to be required to be investigated in detail when you do a detailed full scope financial due diligence. Okay. So as we discussed in brief history, nature of business, location of warehouses, facilities, employment, product, service, and market. Okay, history of the business, inventories, franchisees, important expenses, research development, foreign currency asset, legislation, information systems. All these things we verify. Accounting policies we have already seen in detail. Review of financial statement also we have already seen in detail. Okay, taxation, cash flow, financial projection, management and employees. Statutory compliance. We have already seen everything this in detail. So now, once this is done, okay, you can say this is how you will do a financial due diligence. Basically, the areas that you will consider in the financial due diligence. Okay, now comes the next part. How will you carry that financial due diligence? What is a basically, way to carry the due diligence? Can anyone tell me? Now, these are the areas that you will cover, but how will you carry? How will you conduct a due diligence? Can anyone tell me that how will you conduct a due diligence? We understood the areas, but how to conduct the due diligence? Anyone? How will you conduct the due diligence? See, areas that are required to be covered is a different thing. Step by step process is a different thing. So, can anyone tell me the step by step process that you will do in the due diligence? Anyone? I'll give you 2 minutes to think. What will be the step by step process that you will cover during the due diligence? Come on, guys. Okay. Basically, it's a very simple. It's very pretty much straightforward and simple. When I talk about step by step process, it's basically, like first you define what is the objective, scope, and objective of due diligence. Okay, first you define the scope and objective of the due diligence. Basically, you understand what is the target company, the buying company, investors who hired you, all those areas that are, for example, which will give you a start to the due diligence. Then you have a process like design, discover, diagnose, delivery. Design means you design a plan, be due diligence. You design a detailed plan like what to cover, when to cover, nature, timing, extents, employees, the help you will have, the team size, resources that will be used, access, terms and conditions with the target company, and everything. On the basis of that, you will discover. Discover means evidence gathering. You will discover or you will identify the things. Then you will diagnose, means you will do the analysis, data analytics or analysis. Analysis of the information that you have received. Okay. Like, for example, you have received information with respect to decreasing sales trend. You have received information with respect to IP issues. You have received information with respect to statutory compliances. You have received information with respect to, other pending litigations. So you will correlate all the dots. Okay. You will correlate all the dots and you will try to understand basically why the revenue is declining, why the company has so many litigations, why the company is into trouble, who is the responsible for that trouble, and accordingly you will deliver the report. Deliver the report means the reporting part. And then it comes to the defending part, means you will present the report to investors and you will answer the questions and you will answer their questions accordingly. So this is how you need to conduct the due diligence. The 6D model: define, design, discover, diagnose, delivery, and defend. I hope I'm clear now. Any doubt on the due diligence process? I'm not talking about areas, it's a process pertaining to the due diligence. Any doubt, guys? So we are talking about the areas of the due diligence, not the like we are not talking about the areas of due diligence, but we are talking about the details pertaining to the process that is involved in the due diligence. Okay. Okay. I hope we are clear till here. So if you want to elaborate over here further, is kind of start with an open mind when it comes to due diligence. Don't assume anything has gone wrong. Do not assume that, because that will give you a wrong direction when it comes to due diligence. So always you need to think about, okay, I need to do a due diligence, but don't presume that something has gone wrong. That is a part of forensic accounting, fraud investigation. Due diligence is different from the fraud investigation and forensic accounting. Okay, so do not assume that. Understand the team required, hire the people, get the people, in the team, then do the discovery. Okay, once you do the design, you do the discovery, and then you prepare a report. This is how a due diligence is required to be carried out. Any doubt? Any doubt with the due diligence part, whatever we have discussed till now? So this was all about the due diligence. Any doubt? Now comes the second area, which is investigation. Okay. Now, can anyone tell me what is the difference between investigation and audit? Can anyone tell me the difference between investigation and audit? What is the difference between investigation and audit? Can anyone tell me that? What is the difference between investigation and audit? Anyone? When I talk about investigation, see, when I talk about investigation, okay, I talk about establishing a fact. The purpose of investigation is to gather evidence, okay, to determine whether a particular fact or a circumstances has happened or not. So the purpose in the investigation is to, identify a particular fact or a circumstance or, some suspected event, which may be irregularity, non-compliance, fraud, misconduct, or, some specific area. But when it comes to the audit, we all know it's about, providing opinion. When I talk about the scope of investigation, it totally depends upon the subject matter that you are investigating. Unlike in the audit, which has a predefined subject scope of the audit. Timing, again, not defined. In audit, you have an annual, but here you don't have any, a defined timeline. Regulatory requirements. So the regulatory requirement for the audit lies under the Companies Act. For the investigation, investigation can be done under the legal provisions. Also, it can be done under the, at the instruction of the management. Means there might not be a legal provision for that. Okay, so both things are available. Then methodology, audit is done based on the risk-based methodology. Okay, a risk-based approach. When we talk about investigation, it's a fact-finding approach. We identify the fact, we find the fact. Limitations. Audit has an inherent limitation that you cannot check and verify each and everything. But in investigation, there is no limitations. The required involvement in audit is limited. When it comes to the investigation, it is huge. So in investigation, you do not stop at a particular point on a sample check or something like that. You verify everything but related to the subject matter. Appointing agency. Audit. In auditor, the appointment is done by the board of directors, approved by the shareholders in general meeting, AGM. In case of investigation, you can be appointed by third party, regulatory authority. So not necessary the shareholders or the board of directors the one who will appoint you. And the last part is a report addressed to. In audit, the report is addressed to the stakeholders, shareholders, creditors, financial institutions. So they are the stakeholders for the audit report. But for the investigation, the appointing authority is the basically you can say the entity or the person who is the stakeholder of your report. So your report is addressed to the appointing authority. I hope I'm clear with the difference between audit and investigation. Yes, no. Yes. Okay. If no doubts, let's understand how investigation is done through an help of a question. India's largest automotive manufacturer, Autogiants Motor, is venturing into electric vehicle market by considering the acquisition of eVisions Dynamic, a rapidly growing startup with innovative battery technologies and a promising portfolio of EV models. To ensure a well-informed decisions, Autogiant Motors has engaged a team of seasoned chartered accountants to conduct a comprehensive financial due diligence on the EV dynamic visions. The due diligence aims to cover any potential risk, evaluate the financial health of the startup, and determine its true value. Considering the unique dynamics of the EV industry and the nature of the startup acquisition, formulate a series of comprehensive and insightful questions that the CA team should address to assess the EV dynamics from a financial perspective thoroughly. Wait a minute. So this we have already covered, this question. Let's proceed to the next one because this is on the due diligence. We have already covered one. Okay, here it is. That question was already covered as a part of due diligence. We saw due diligence part. Let's see another question on the investigation part. A whistleblower has raised allegations of the financial irregularities and potential fraud within the accounts payable department of Pharmawell Industries, a major pharmaceutical company listed on BSE. The company's board of directors has tasked a team of chartered accountants with conducting a thorough investigation into allegations and reporting their findings. Considering the sensitive nature of the investigation and the potential ramifications, outline a step-by-step approach that the CA team should follow to conduct a comprehensive and objective investigation into the alleged financial irregularities at the Pharmawell Industries. Okay, so you need to elaborate each step, okay, and detail actions and considerations. So you need to provide step-by-step approach that the CA team should follow to conduct the investigation. What you need to do is step-by-step approach that the CA team should follow to conduct a comprehensive and objective investigation. Tell me, so how will you conduct this investigation? What approach you will follow? Come on, guys. You need to provide step-by-step approach. Come on, come on. What you will do when it comes to the investigation? What approach you will follow? Step-by-step approach. Yes, Abrakesh. Okay. What else you will do? If I ask you, how will you do the investigation? The step-by-step process. How will you do it? No, Abrakesh, I'm asking the process, not the areas. Again, there's a difference between the scope that you will check and the process you will follow. So I'm talking about the process that we will follow. Okay, I'll tell you. When it comes to the process, okay, it's pretty easy. Nothing difficult over here. So the process is like this way. First, I will define, the objective and scope of the investigation. So determination of So first I will identify what is the objective and scope. Means here the scope will be, areas that are highlighted by the whistleblower allegation. Okay. Or the individuals who are involved in the irregularity or the process who are involved in the irregularities, the alleged fraud. Okay. Those are the areas that will be there as a part of the scope. Okay. The time period of the, suspected fraud. Okay. Then, when I talk about objective, what is the objective? Validating the whistleblower's complaint, identification of fraud, quantifying the financial impact, assessing the effectiveness of the internal controls, recommending the corrective actions. Okay. So these will be, one side, I will be defining an objective, one side I will be defining the scope. Based on the objective, the scope will be defined. And accordingly, I will, define the objective and scope of the investigation. That will be the first step that I will do. Second step, I will formulate a detailed investigation program. Formulation of investigation program. Okay, what I will do is I'll prepare a detailed investigation program outlining the specific task to be performed. Okay, the timeline for completion and the resources that will be required to perform that particular investigation. I will identify the key areas of the investigation based on the nature of the allegation or the details that has been provided by the whistleblower. I will assign responsibilities to my individual team members. Okay. based on their experience and based on their past work history with me. And then I will open and establish a secure and confidential communication channel for the team members to share information and update. See, confidentiality is a very important part in investigations. Okay, so establishing a secure communication channel or confidential communication channel for the team members to share information and update is very crucial. So that is the formulation of investigation program. The third step, examination and study of various records. You do the examination. So examination and study of various records. For example, you will gather financial information, financial records, invoices, purchase orders, payment vouchers, all the relevant details. Then you will analyze the documents, discrepancies, irregularities, unusual patterns. You will obtain more evidence to support that discrepancy, irregularity, or unusual patterns. Okay. For example, email, contracts, internal memos, any minutes of meeting discussions, kind of that way. Then you will conduct interview with the relevant employees. You will gather more evidence. You will analyze that evidence, and accordingly you will check whether any further procedure required to be performed or not. The fourth step, very crucial, analysis and sorry, analysis, processing, and interpretation of the findings. So at times it becomes very difficult to identify a particular whether this has happened or not, even though you may be having a lot of evidence in your hand, but you might not be having conclusive evidence. Okay, you might be having a circumstantial evidence in your hand. As a result, you know investigation requires thorough analysis, processing, and interpretations of the finding. Okay, like based on the evidence you have collected, you identify, you cross reference, you understand who are involved, what is the quantification of the particular fraud or financial impact. Okay, you assess the root cause of irregularities such as weakness in the internal control. You try to identify who are involved in this particular fraud or scheme, something like that. So analysis, processing, and interpretation of the finding is a very crucial step in your investigation, based on which your next step is dependent. And that is fifth step, and the last step, that is preparation of the report. So in the last, once you do everything, you compile everything, you prepare a report, a detailed report, laying out whatever you have identified, whatever you have till now examined, investigated, all those things you will specify in that report, and you will present that report. This is how investigation is required to be done. Any doubt? So if I talk about the 5-step approach, is determination of objectives and establishment of scope of investigation, formulation of the investigation program, examination and studying of various records by reference to appropriate evidence, analyzing, processing, and interpretation of findings. And the fifth one is the preparation of report and drawing up conclusions. Any doubt till now? Any doubt? No doubts? Okay. So we understood the processes, okay, or the steps that were involved in the investigation. Let's understand one more area, that is the reporting part, and that is a very critical. Okay. When it comes to preparation of report, there are things that the investigator should, take care of. And let's understand those areas by way of an question. A whistleblower complaint has triggered an investigation into the allegation of bribery and corruption within the procurement department of Infra Build Corporation, a major infrastructure development company in India. A team of chartered accountants has been engaged to conduct a thorough investigation and prepare a report detailing their findings and recommendations. Upon completing the investigation, one team member submits a draft report that includes the following paragraph. During our investigation, we discovered an email exchange between Mr. A, head of procurement at InfraBuild, and Mr. B, supplier, discussing a special arrangement for a recent contract award. Although the email did not explicitly mention a bribe, the tone and the context strongly suggest that an illicit payment was made to secure the contract. Now, here what you need to do is evaluate this excerpt from the draft report and comment on the important issues to be kept in mind by the investigator while preparing his report, including all the other areas. So you need to evaluate this particular paragraph, this one, and tell me what is not appropriate as per you when it comes to the reporting. If I include this paragraph in my reporting, what is not appropriate? Can anyone tell me? What is not appropriate in this particular paragraph? This is a classic question on, basically, you can say that, how to write a report, investigation report. Very good, Abrakesh. Yes, very good. Anything else? Anyone? Very good question, I would say. It will test that, okay, what and how, report writing is required to be done, and what are the key important areas that are required to be taken care when we are drafting a report. Abrakesh, can you give example of the wordings one? Okay. What else? Anyone else? No? I'll tell you. There are few things in this particular paragraph that are not appropriate. Number one, if you see the first part over here, special arrangement. Okay. So what is special arrangement? That is something not defined anywhere. So the term special arrangement, it is creating ambiguity. Okay, what is special arrangement? It's an ambiguous word, like some kind of arrangement. Like in investigation report, you have to be precise what you are using as a term. You have to specify. You have to explain everything. Here, the nature of the arrangement or concrete evidence, there is no support in for that. Number two, if you see the wordings, strongly suggest investigation report when it is prepared, it's not on the basis of the suggestion or what you think might have happened. It is a fact finding process. So using the term strongly suggest or appearing or something like that, which is giving a kind of a probability like a scenario, okay, speculative or lacks definitive proof. So here there is a lack of definitive proof. Okay, like strongly suggest, but it's a fact finding activity. We have to be 100% sure. Then you don't know in the question you don't have the details about the special arrangement over here. Okay, now the term strongly suggest along with the special arrangement can be misinterpreted. Okay, uh, plus here you are talking about email exchange, discovered an email exchange, but this is a limited information. Plus there is no quantification. So all these things which are here, okay, in this particular uh, paragraph are creating ambiguity, misinterpretations chances, okay, they lack clarity, and as a result, this is something a problem when you write a investigation report. Clear? So clarity, precision, objectivity of the report, these things should be there. If I have to, provide you like redraft of the particular paragraph, okay, this should go like this way. The redraft of a particular paragraph. See, during our investigation, so during our investigation, we discovered an email exchange dated. So the date specifies when the discussion happened between Mr. A and Mr. B. Contractor number, name, some information about the contractor or contract. Okay. The email discussed a payment of amount this much to Mr. A in connection with the contract award. So here the quantification is there. While the email did not explicitly state the purpose of the payment, further investigation revealed that the supporting evidence 1, 2, and 3 indicated the payment was likely a bribe intended to secure the contract for B's company. This is how you need to redraft it, by including more details and, by providing more information so that it now supports the finding. It now supports the process. Clear? Any doubt with this? Any doubt? Let us see one more question on the similar line. A whistleblower complaint has triggered an investigation into the allegations of financial impropriety within the executive compensation program at the Global Corp, a multinational corporation. A team of chartered accountants has been engaged to conduct a thorough investigation and prepare a report detailing their findings and recommendations. Upon reviewing a draft of the report, a senior partner noticed the following paragraph. Our investigation revealed that the CEO, Ms. X, received an unusual large bonus in the last fiscal year despite the company's lackluster financial performance, means a lack in financial performance. This raised serious concerns about the integrity of the compensation committee and the decision making process. Now, you need to evaluate this except from the draft report and identify any areas where the language or presentation could be improved. Okay, to improve the accuracy or the understanding, to avoid lack of uh, clarity, objectivity, and accuracy. So, what are the problems in this particular paragraph over here? Can anyone tell me the problems in this particular paragraph? This is the paragraph. So, what is the issue in this paragraph basically? Come on, guys, quickly. What is the problem in this paragraph? Can you identify some areas? Abrakesh, quantification of what? Quantification of what? Okay, understood. Very good. What else? What do you think could be, improved in this particular paragraph? Come on, guys. Very good. Yes. Good, Abrakesh. Anyone else? Anyone? Okay, I'll tell you. If you see few terms over here, number one, unusually large bonus, no quantification. So what is unusually large? There is no quantification. Does not specify any amount, the bonus provided or the benchmark. Okay. Last fiscal year they have to be specific. Which last fiscal year? What was the financial year? Despite the company's lackluster financial performance. So if company did not perform well, again this lacks quantification. Okay. What was the company's performance? How much loss the company made? The decrease in the revenue compared to the last year, and something like that. And then this raises serious concerns about the integrity of the compensation committee. This raises serious concern about. So if you see this part, serious concern. Now investigation is done for fact finding to establish a fact. Okay. If they will also say this raises a serious concern, then we know there is a concern. That's why we hired you to do the investigation. Now in the report, if you state that this raises a serious concern, that is again premature conclusion, means you are not giving a conclusive outcome of your investigation. You are just raising the concerns. Okay, that is not something is required to be done. This is judgmental or premature conclusion. So if you focus on these areas, this is something is required to be improved. Okay, and this is will once improved will bring a clarity, and I'll give you an example that how it can be improved. So improved paragraph example, our investigation found, okay, that the CEO Miss X received a bonus of this much amount in the last fiscal year, representing a percentage this much increased compared to the previous year. During the same period, the company's net income declined by this percentage. So they are talking about net income and the percentage. They are quantifying the financial Lexter in financial performance, primarily due to the following reasons. So they have also specified the reason for the company's bad performance. Further analysis is required to determine whether CEO's bonus was consistent with the company's compensation policy, peer group benchmark, and overall financial performance. So they are saying that further analysis is required. So as of now, this is a draft and in interim stage. So it gives a clarity. Okay, this is the interim report. Further analysis will be done. Okay, and they will compare with the company's compensation policy, peer group benchmarks, and overall financial performance. This brings more and detailed clarity to the report rather than the previous paragraph. I hope you guys are clear on this. Any doubt? Any doubt? If no further doubts, let's take one more question on the similar lines. Very interesting question. A consortium of investors is considering acquiring a major stake in the rapidly growing e-commerce company, eShop Ventures. They have engaged a team of chartered accountants to conduct a comprehensive financial due diligence on eShop Ventures, with a particular focus on its valuation and growth potential. In the final draft of the due diligence report, the CA team included the following statement. Based on our analysis of eShop Ventures' historical financial performance and the current market trend, we project that the company's revenue will grow by 30% annually for the next 5 years, resulting in a significant increase in its valuation. Evaluate the aforementioned statement in the context of professional due diligence practices. Okay. Now here, you can also substitute the term due diligence with investigation. So let's say, for example, here the term instead of financial due diligence, if it is investigation, question will remain same. Okay. So instead of financial due diligence, if it is the term investigation is used, question will remain same. So this is applicable for both financial due diligence as well as investigations. So tell me, what is the problem in this particular statement over here? What is the problem in this statement? Very good. Very good, Abhirakesh. Come on, guys. What is the problem in this statement? Anyone? What is the problem in this particular statement over here? Very good, Abhirakesh. Yes. Anyone? Think of it. It's pretty straightforward. Trust me. Very good. Yes. So if you see in this particular scenario over here, they are saying that we project that the company's revenue will grow by 30% annually. They are validating projection, kind of providing, okay, assurance over futuristic statement. So kind of providing assurance over a future statement, which is something which is something is not required, or it should not be done, because investigation is a fact finding process. Okay, investigation is a fact finding process, not a process where you can validate the accuracy of the future projections. Okay, and hence investigators should avoid, you know, uh, kind of providing any assurance on the future performance. Okay, or the kind of, should avoid to provide any validation of the future projections. Okay, now if it is a due diligence, again, same things comes into the picture, that there should not be any assurance for the future statement, but saying that, in due diligence you can still have a modified paragraph on this particular area. I'll show you one example of that, which will not be futuristic, but somehow will give a same will give some background about the management estimation. So based on our analysis of each of ventures historical financial performance, the company has demonstrated a strong track record of the revenue growth, averaging X per year over past 3 years. So here they are talking about the past revenue growth, average past 3 years revenue growth. So this is based on past data. The growth has been driven by the key list of contributing growth factors. Like, why there has been growth. So driven by the factors, they have specified the factors. While future performance is inherently uncertain. So they are talking about uncertainty when they are talking about future performance. The company's current trajectory and the market position suggest that it has a potential for continued growth. Again, they are not saying that, okay, they are kind of providing assurance, but they are saying based on the details available, company has a potential. Okay, however, investors should consider various risk factors that could impact company's future performance, such as the risk factors. So by this way you are specifying that, okay, whatever information you have based on the past track records, and you are kind of, providing no assurance for the future. This is how the statements should be drafted in the investigation or due diligence report. Any doubt till now? Any doubt? Any doubt, guys? I hope now you are clear with few things, few areas that are required to be taken care when it comes to the drafting of the investigation or due diligence report. Okay? Any doubt? Okay. If no further doubts, let's take a quick 10-minute break. After the break, we'll gather back and continue the session. Let's take a quick 10-minute break. Thank you. We were discussing about investigation, report writing. So there are some special aspects when it comes to the investigation, okay, that we need to understand. Number one, and I will ask in a form of question only, so I would be expecting answers from you. Number one, whether an investigation is required to undertake 100% verification approach or whether he can follow the selective or sample basis approach. So you tell me, guys, whether investigation has to always take 100% approach when he's doing the investigation or he can do the sample basis. So what approach he can do? Can he go for the sample basis or can he adopt sample testing instead of 100% approach? Or he has to follow 100% approach? Anyone? What he should do? Should he take 100% approach? Come on, quickly, guys. Is it possible for investigator to adopt or to take sample testing instead of 100% approach? Is it possible? Yes or no? Okay. So it depends upon case to case basis. So let's say, for example, if the investigator wants to establish a fact, let's say investigation for the fraud, investigation for the cash misplaced, or investigation for misuse of asset, there is no option than 100% approach. But on the other hand, if he is doing investigation for analysis of the profitability, if he is doing investigation to identify is there any potential pending litigation, in that case, the approach can differ, can have a sample testing also, but that totally depends upon the subject matter and the type of investigation that is done. So yes, it can be there, but again, that depends upon the subject matter and the type of investigation. Second question, when investigation requires some understanding or something with respect to the financial statements. So at that point in time, can investigator put reliance on already audited financial statements? If, let's say, for example, financial statements are already audited, so is investigator allowed to put reliance on those audited financial statement, or he has to consider that these financial statements are not audited, I need to go into detail, or I'll not rely upon the audited financial statement? So what is the approach he should follow? Reliance on the audited financial statement because it had been audited, or he should not place any reliance? Come on, guys. What do you think? Anyone? Okay, I'll tell you. So that totally depends upon why the investigation is being carried out. If the investigation is being carried out for the purpose of some irregularities or some issues that have been identified in the financial statement itself, then how can I place a reliance? If the investigation is carried out for some other purpose which is not linked with the financial statement, yes, in that case, I can place reliance on the financial statement. For example, investigation to value the goodwill, investigation to identify the goodwill, investigation for the incoming partners. Okay. So in that case, I can put a reliance on the financial statement unless I have identified something which has caused me to believe that, I shouldn't place a reliance. Till that time, I can place a reliance. Okay. So till the time it's something, not has, it has not come up to me that that can, kind of provide me or kind of, indicate, okay, I shouldn't place any reliance on the financial statement. I can replace a reliance as an investigator. Okay. So let's say, for example, performing analytical procedures, I may place a reliance on financial statement or key financial ratios. Okay. So that totally depends upon the scope of the investigation, whether to put a reliance or not to put a reliance. So these are certain important matters when it comes to the investigation. Any doubt till now? Any doubt, guys? Okay. If no further doubts, uh, there could be a multiple type of investigations that can be there. So, for example, statutory, non-statutory investigations. Statutory investigations basically are the investigations which are, carried under any provision of law. For example, Companies Act, investigation into ownership of a company, Section 216, investigation by inspector through an order of the central government, Section 210, by SFIO, Section 212, other cases and other investigations, that is the Section 213. Same way, you have an investigation under SEBI, SEBI Act also. So various, investigations can be carried out. Now, when it comes to the non-statutory investigation, it is, either started or initiated by management of the company or by a third party who is associated with the company. But these are not governed by any law or regulation. Okay. Or these are not carried under any law or regulation. So accordingly, these are the two type of investigations: statutory, non-statutory. Okay, I'll not go in the detail of the sections because you might already seen, these sections in your corporate law part. But section 210, 212, 213, 216 are some important sections under which investigation can be carried out. Any doubt? Okay, so now this was an investigation with respect to section 210, 12, 13, and 16. Let's see one more question on the investigation itself, which is based on section 447 and 143. A whistleblower complaint alleged that the senior manager at the Innovate Tech, a publicly listed technology company, has been manipulating financial statement to inflate profits and secure a lucrative merger deal. The company's board of directors has appointed a team of chartered accountants to investigate the allegations of fraud. During the investigation, the team finds evidence that the management is intentionally overstated the revenue by recognizing sale before they were earned and understating the expense by deferring the certain cost. However, one of the team member argues that these actions do not constitute fraud because there is no personal or direct personal gain involved for the executive. The team member cites interpretation of section 447 of the Companies Act, which defines fraud as an act committed with an intent to gain undue advantage or injure the interest of the company or its stakeholders. Evaluate the team members' argument in the light of provisions of the Companies Act 2013 and relevant auditing standards. Okay. Thus, absence of a direct gain for the executive absolve them from a fraud acquisition. Provide detailed analysis referencing the relevant legal and professional guidelines. So here, what is the scenario is the management is doing something, okay, which is not appropriate, but the team is saying that this cannot be termed as a fraud under section 447 because here there is no personal gain or advantage to the executives. Rather, the gain is happening to the company. So this cannot be termed as a fraud at the end. So what do you think? Can it be termed as a fraud or not? Come on, guys. So here it is talking about, the wordings of section 447 of the Companies Act. And accordingly, the CA team needs to understand the allegation over here. Come on, guys. What do you think of this particular scenario? Come on, quickly. What is the requirement of section 447? What section 447 says? What section 447 says? Very important part. Trust me. Abrakesh, can you explain how it is falling under the purview of 447? There is no personal gain happening to the executive. There is no wrongful gain or wrongful loss over here to the company. So what the team is saying over here is that the team is saying that the interpretation of section 447 of the Companies Act, which defines fraud as an act committed with intent to gain undue advantage or injure interest of the company or its stakeholders. Now here they are saying this is not a fraud because there is no direct personal gain involved for the executives. Is this interpretation in line with section 447? Is section 447 saying the same? Come on, quickly, guys. Very crucial and important part that we need to understand. Very good. Yes, Rakesh. Correct. So even if you see the definition of 447, like, in explanation, you have a definition of fraud. What it says, fraud in relation to the affairs of the company or any body corporates includes any act, or concealment, omission, or fact, okay, committed by any person or any other person within the convenience in any manner with intent to deceive, to gain undue advantage or to injure the interest of, okay, the company, its shareholders, creditors, or any other person, whether or not there is any wrongful gain or loss. So wrongful gain or loss is not even required to be considered. Number two, if you have an intent to deceive, okay, or gain undue advantage or to injure, but there is an intent to deceive over here. Although you don't have an undue advantage or injure any interest, but still you have an intent to deceive, that satisfies the condition for the fraud. And it is not necessary that you have intent to deceive the company. It could be company, shareholders, creditors, or any other person. In that case, it will be fraud. So here, the interpretation of section 447, which is done, is not correct. This falls under the category of the fraud. And accordingly, the team should evaluate and, do the reporting and investigation. Clear? Any doubt? Any doubt? Okay. If no further doubts, then let's take one more question. A whistleblower has alerted the board of directors of Innovate Tech, a publicly traded technology company, to potential fraudulent activities within the finance department. The board has engaged a team of chartered accountants to conduct an independent investigation into the matters. During the investigation, the CA discovered that a senior finance executive, Mr. X, has been falsifying expense report for personal gain over a period of several years. The team has noted that Mr. X has an access to the company's financial system, enabling him to manipulate expense record without detection. When confronted with evidence, Mr. X argues that his actions were justified because he failed, underpaid, and believed that the company owed him extra compensation. He also claims that he never intended to harm the company and that his actions were isolated incidents. A junior member of the CA team, influenced by the fraud triangle model, concludes that Mr. X's action do not constitute fraud because he lacked the capability to commit a complex financial crime. The junior member argues that Mr. X's actions were impulsive and driven by the personal grievance, not a sophisticated team with a malicious intent. Evaluate the junior member's team assessment in the light of fraud diamond model. Does the absence of perceived capability negate the possibility of the fraud in this case? So tell me one thing before we go into the assessment. What is the fraud? We have heard the fraud triangle model. Can anyone tell me what is a fraud triangle? Can anyone tell me what is a fraud triangle? So there's a fraud triangle model and there's a fraud diamond model. Can anyone tell me what are these two models, triangle and the diamond? It is related to that model. What is fraud triangle? Anyone? We have read fraud triangle at various instances, even in SA 240. So there are three elements of fraud: one, pressure or incentive; second, opportunity; and third is a rationalization. Okay, that gives the rise to the fraud triangle. So When I talk about fraud triangle, it works on a three aspects. So the first one is your pressure or incentive. Second one is your opportunity. And the third one is your rationalization. So based on these three factors, these are the three elements of fraud. When these three elements are present, it is assumed to be believed that, there are high chances of fraud. When I talk about pressure is kind of, represent, or incentive is kind of, I represent, okay, there is some incentive available to conduct the fraud or some pressure to conduct the fraud. Opportunity means lack of oversight, lack of internal controls, lack of inadequate segregation of duty, so that person can conduct the fraud. And third part is a rationalization. That is rationalizing the fraud that he needs to do that. Okay, that is a fraud basically triangle. But when it comes to fraud diamond theory, it is bit different than the fraud triangle. So fraud diamond theory basically has four sides. Okay, fraud diamond theory has four sides. Now, when I talk about fraud diamond, it takes all the three elements of fraud triangle, plus it add one more element to that. So the three elements of the fraud triangle are pressure or incentive, opportunity, rationalization, and the fourth part is the capability. Now, what is this capability? Capability is kind of, you can say personal traits or ability that allows the person to commit the fraud. For example, position or authority in the organization, intelligence or creativity, okay, skills that are required. So you can say kind of skills to commit the fraud. If the person is under pressure or has an incentive, even if he has the opportunity, there are, weak internal controls. If he can, still rationalize, but still he needs the skill or capacity to conduct the fraud. That is the capability and the diamond model. Okay, so this is how the fraud triangle to diamond transition is there. Now, in the current question, we are asking the capability. Like, the team member is saying that, Mr. X doesn't has a capability to commit a fraud. Okay, that's why we cannot term this as a fraud. But here in this case, okay, the capability is there. Like if you here, if you see the person is just basically, if you see Mr. X, okay, he is a senior finance executive. He has been conducting fraud. So capability is present. And in this question, you need to provide a detailed analysis incorporating four elements of fraud diamond. So you need to evaluate all the four elements of the fraud diamond, like where is the incentive, where is the opportunity, where is rationalization, and where is capability. Okay, this is how you need to answer this particular question by explaining the fraud diamond part. Clear with respect to fraud triangle and fraud diamond theory? Abrakesh, access to the financial system will be opportunity. If he has the access to the financial system, it's an opportunity. Opportunity doesn't mean that the person will conduct the fraud. Capability is kind of, he has the access, but how to utilize that access is the capability. I may have a 10 different access in the company, but whether I can use those access, I have that kind of knowledge, or do I have that kind of knowledge to perpetrate that particular scheme, okay, or to make that particular scheme of fraud. That is the capability. Any doubt? Any doubt with this? If no, let's see one more question on the similar lines. A manufacturing company, Fabtech Industries, has been experiencing consistent discrepancies between their recorded inventory levels and actual physical count. The company's management suspect inventory fraud and has engaged a team of chartered accountants to investigate the matters. During their investigation, the CA discovered several instances of the employees removing the finished goods from the premises without proper authorization or documentation. The employees involved claimed that these goods were damaged or defective and were being disposed of according to the company's policies. However, the CA finds no record or evidence to support these claims. The lead investigator on the CA team prepares a draft report stating that our investigation revealed that several employees have been removing finished goods from the premises without authorization. We believe this is an isolated incident of theft and recommended disciplinary action against the involved employees. Okay, so they are saying this is an isolated incident and doesn't involve any fraud scheme or something like that. But what is happening is that the particular employees, okay, are removing the goods, okay, from the premises without proper authorization or documentation. And there have been discrepancies between their recorded inventory levels and actual physical count. Now, you need to evaluate as an investigator that the statement provided in the report for the potential inventory fraud is appropriate or not. Are there any evidence presented supporting the conclusion that this is an isolated incident of theft and there is no scheme of fraud? Okay, so you are required to provide on the forms of inventory fraud that should be considered over here. So tell me about the inventory fraud that could happen over here based on the given information to you. And what are the red flags you can consider in this particular kind of fraud? Is it appropriate to consider this particular statement that, this is an isolated incident? A statement that this is an isolated incident of theft, okay, and not a fraud is appropriate or not? Come on, guys. Do you think this is appropriate to term this as an isolated incident? So there was, also, discrepancies between the recorded inventory levels and the actual physical count. And that has been experienced consistently by the management. Okay, so management was consistently experiencing this particular thing, that their recorded inventory level were different than the actual physical count. What kind of inventory fraud could happen over here? Could you give some examples? What kind of inventory fraud can be considered over here? Anyone? Employees were claiming that these goods were damaged and defective and were being disposed of accordingly to the company policy. But there is no record or evidence to support these claims. What do you think? Very good. Yes, Abakash. So in this current scenario, what I could say is, one, there could be concealment of the inventory through write-offs. Okay. So for example, there were, differences in actual inventory level. So there were differences in actual inventory level and actual physical, like recorded inventory level and actual physical count, which were, also highlighted by management. So there could be a fraud wherein, the concealment of theft was recorded as write-off on account of damaged goods. So there was an actual theft which was going on, but the company, but the employees were saying these were damaged. So there was a concealment of theft. Second, there was a manipulation of the inventory records could also be there. Like, absence of the records for the removed goods. Like there were no records found. So absence of records or manipulation of records can also be there. Okay. There could be unrecorded sales. Unrecorded sales because, at times happen that, okay, we are selling the product, the employees are selling the company product, but they are not recording the sales. They are directly taking the cash from the customer and they are showing that, okay, goods were damaged and that's why we took it out. Okay, unrecorded sales or dispatches. So these are some kind of, inventory fraud that can happen over here, and terming them as an isolated incident of theft is not appropriate. As a result, the CA team should consider these possibilities. Okay, there could be, a larger scheme of fraud involved over here, and they should not limit their focus to the simple theft. Calling that as a single incident or isolated incident of theft is not appropriate. It should be, investigated further with respect to other type of inventory frauds. Clear? Any doubt? Any doubt, guys? Okay, if no further doubts, let me proceed to the next question on the similar lines. A wholesaler, Wholesale Distributors Limited, has noticed irregularities in their customers' account receivable. They have hired a chartered accountant to investigate potential fraud within their customer ledger. During the investigation, the CA identifies a pattern where several customer accounts show zero balance despite recent sales transaction. The CA concludes in their draft report that the presence of a zero balance in several customer accounts, despite recent sale activity, indicates that the company's collection process is highly effective and efficient. Evaluate the CA's conclusion in the light of typical method used for fraud in customer ledger. Okay, so here you need to evaluate whether the report or reporting done by the CA is appropriate or not. That is, zero balance in several customer ledgers after recent sale activity indicates that the company's collection process is highly effective and efficient. Is it so? Or what could be the other type of fraud which could be involved in this? So evaluate the CA's conclusion in the light of the typical method used for fraud in customer ledger. Come on. So you need to tell me what kind of frauds could happen over here. Or is it appropriate to term that the process is highly efficient and effective? Okay, Abrakesh. Come on, guys. Come on, quickly. What kind of fraud could happen in the customer ledger? Okay, Abrakesh, very good. Anyone? Okay, I'll tell you. There could be multiple such kind of fraud schemes which can happen over here. Number one, teaming and leading. Okay, here teaming and leading can also happen. Like money received from one customer is used to cover previous customer's debt. So by this way, they could also improve ARs, yeah, account receivables aging. By applying the money to the old outstanding dues first, and then keeping open the recent outstanding dues. This way, the company will be able to show the account receivables are good, and they are recently aged. So teaming and leading. Okay. Second, there could be fictitious allowances or rebates. So fictitious rebates or discounts, kind of. Okay. By this way, they can write off the balance. Okay. They can write off the customer balance which is there. Third, misposting of payments. Okay. So, kind of posting a payment into some other accounts, which is already a part of teaming and leading. But here, this is done, instead of one customer to another, they park it in some other account. Misposting of payments. Unauthorized write-off, again, fictitious rebates. Okay. So these are certain schemes that could be, followed, or that could be, used to hide, AR balances, or to, to zero out the customer ledgers, even though you have a despite, even though you have a recent sale activity. So by these methods, the employees or the person concerned over here can hide the recent balances or the sale transaction. Any doubt? So usually, when these kind of scenario happens, what examiner or the investigator has to do is examine the supporting documents of the received payment. Okay, reconcile the accounts, interview the employees, confirm the balances with customer, and by this way you can uncover what is happening. Any doubt? Any doubt? Okay. If no further doubts, then basically I want to show you one video with respect to one conversation wherein, the team is discussing a forensic accounting case. Okay. And basis of this, we will do a further discussion. Let me see if that is feasible. Just a minute.
Rahul, have you been keeping up with the X construction?
Okay, let me share my screen accordingly. Okay, let us see this one. And accordingly, then once you'll see this particular case and this video, we will, then discuss what has happened and what has not. And accordingly, we'll try to understand forensic accounting scenario over here. Okay, let us see that.
Rahul, have you been keeping up with the X construction saga? The Income Tax Department's formal inquiry into Mr. X's dealings has really shaken up the real estate sector.
Yes, Neha, I've been closely monitoring the developments. The forensic accounting engagement led by Mr. Y has brought some startling facts to light. Their meticulous examination of the financial records was quite revealing.
The level of detail in their analysis was impressive. This was due to the planning and expertise they brought at the start of the engagement. They found a significant overstatement of expenses, which inflated the company's financials.
Indeed, and they identified the payments made to non-existent vendors by verifying the vendor masters with the same bank accounts and their invoices. It's a classic red flag in forensic investigations, pointing towards embezzlement.
The unaccounted cash transactions were identified by employing a combination of data analytics techniques and manual scrutiny. By analyzing patterns and inconsistencies in the cash flow statements, they were able to flag transactions that lacked documentation.
It's the reconciliation of bank statements with the company's books that revealed the extent of the issue. Discrepancies in deposit amounts and withdrawal patterns were telltale signs of manipulation.
The fictitious land transactions were a master scheme in their fraudulent operations. Acquiring properties at inflated prices allowed them to channel the excess funds into various financial schemes, effectively laundering the money.
Precisely. And when Mr. Y connected the dots between Mr. X and his associates through these transactions, it became the linchpin of the case. It's fascinating how property dealings can be manipulated for financial gain.
The comprehensive case built by Mr. Y's findings was formidable. The detailed reports, expert opinions, and supporting evidence they prepared were instrumental in the court proceedings.
True. Mr. Y was able to trace the fraud, which was nothing short of the application of forensic techniques, knowledge, and skills to identify evidence.
Yes, indeed, this is how forensic investigation is done.
So here what we saw is a detailed forensic investigation or forensic accounting case which was carried out. Okay, they were discussing few things on that. Can anyone summarize this whole scenario? Like, what you learned from this whole scenario? What has happened in this scenario? Can anyone summarize that? Anyone? What was happening in this particular scenario? What they were talking about? Okay, and how the forensic accounting or the investigation was done over here. Anyone? Come on, guys. Can anyone summarize this thing? How this was done basically? No? Okay, let us see a few things over here. First, if you see, they were talking about Mr. X constructions, X construction and Mr. X, search and, a case that was there. Like Income Tax Department started formal inquiry into Mr. X dealing. Okay. Then they were talking about basically in the second slide, second detail, that there was a forensic accounting engagement led by Mr. Y, which revealed some particular information. Now, if you just see this particular part, okay, over here, what is happening is the first part, which is there was some investigation done by income tax department, and then appointment of accounting engagement team led by Mr. Y is the first step of a forensic accounting, that is initialization, where you initialize the engagement and you develop a mandate. Basically, when I talk about developing a mandate, means kind of providing why this engagement is required to be done, why this forensic accounting engagement is necessary, what is the purpose of this forensic accounting engagement, who will do it, what will be the responsibilities of the team they are involved, the objective, the scope, everything, like the basic understanding of the scenario. That is something called as initializing and creating a mandate for the particular scenario, okay, for the engagement. That is the first step of forensic accounting. Then if you see the second step, what they are doing is, over here they are trying to plan and whole engagement. If you see, they were discussing that the level of detail in their analysis was impressive. This was due to the planning and expertise they brought at the start of the engagement. Means at the start of the engagement, what was done is planning was done. Okay, like what expert we will require, which areas we will look into, the nature, timing, and extent of the particular engagement, and the experts, outside experts that will be brought into the engagement. Everything was done at the start of the engagement. The planning was done. Based on that, they tried to perform the engagement and they identified a lot of things. For example, overstatement of expense of significant inflated companies' financial. If you say the third part, okay, they are discussing. So the team identified the payments made to non-existing vendors by verifying the vendor master with the same bank account and their invoices. Okay, so here what they are pointing out is gathering the evidence. They gathered the evidence by performing the test, by performing the analysis, by performing the detailed investigation which is required. So verifying the vendor master with the same bank account, it's nothing but using or gathering the evidence through forensic investigation techniques. Then the next part, again, what they did over here is data analytics techniques, okay, and manual scrutiny. So they employed a combination of data analytics and manual scrutiny. Now, this is nothing but the fourth step, where you analyze the pattern, inconsistencies, you perform the data analytics, you do a detailed analysis of the particular scenario, you do a detailed analysis of the evidence you have gathered. Okay, that is the fourth step in your forensic accounting engagement, doing the analysis. Okay, again, they are talking about the bank reconciliation, doing the analysis, gathering the evidence. And why it is coming again? Because you do not stop at a particular one point. Okay, what you do is gather the evidence, perform the analysis, again gather the evidence with respect to the same area. Means you will gather more evidence to substantiate whatever you have done the analysis. Then you will again do the analysis. This cycle goes on. They verified the vendor master, they verified the bank reconciliation, then they verified some fictitious land transaction, did some more analysis. Okay, and if you see in the last, what they did is, so they connected the dots. Precisely when Mr. Y connected the dot between Mr. X and his associates through these transactions, they came to know about property dealings and how it can be manipulated for financial gain. So by gathering evidence and doing a continuous analysis, they somehow identified the whole scenario. They identified the whole case, that what was going on. So gathering evidence and performing analysis is a continuous activity. It happens till the time you get a conclusion or the desired evidence and the result. Okay. And then they prepared a report. Okay. The comprehensive case built by Mr. Y's finding was formidable. The detailed reports, expert opinion, supporting evidence. Okay, they prepared and and embedded in that particular report was something which supported their particular report and the case in the court proceedings. So the fifth part is the reporting part, where you need to prepare detailed reports, expert opinion, supporting evidences. You need to include everything in the reporting. And then there's a sixth part, is the court proceeding. Because we assume litigation will follow. In forensic accounting scenario, we do or we perform the engagement so that whatever identification is done, whatever report is prepared, that report is for for the presentation in the court of law. So court proceedings are assumed to be there in the forensic accounting. Okay, and here if you see, they use the forensic technique, knowledge and skill to identify the evidence, to record the evidence, to do the analysis, and to perform the detailed forensic accounting. And this is how the forensic accounting is required to be done. So this is nothing but a step-by-step analysis of how forensic accounting engagement is required to be done. Clear? Any doubt till now? So this is how the forensic accounting engagement is required to be done. We saw the detailed step-by-step analysis over here.
Sir, Abrakesh.
Yes, Abrakesh.
Sir, then in that case, how forensic accounting is different from investigation, particularly with respect to the fraud? Otherwise, even in investigation, we are supposed to do all such matters which, are required to be done in forensic accounting.
Okay, I'll tell you. See, forensic accounting is not only for the fraud detection. Okay. Forensic accounting is not only limited to the fraud detection, but it is for the other areas also. So it's not only I do a fraud identification or investigation of fraud, but what I do is I use the skills of accounting, forensic accounting, to identify the evidence. Okay, now evidence can be pertaining to any transaction. Well, let's say there's a commercial dispute happening. Okay, now wherein the dispute is about the some acquisitions and mergers and some contracts where the terms and conditions were there. Now in that case also, forensic accountant can be involved to understand, okay, what is the dispute, what is the evidence, how the transaction is structured, what should happen, what should not happen, who has done what, and that in the end is presented in the court of law, so that the court can decide upon the dispute. So when I talk about forensic accounting, investigation, fraud investigation is one part of that, but there are other aspects also involved in the forensic accounting.
Okay, thank you, sir.
For example, at times, in the arbitration or for the purpose of, arbitration also, some companies choose to appoint forensic accounting team, okay, so that they can prepare the report and they can submit the report to the arbitrators. So there are many aspects. But as I told you, as we discussed, the 6 steps of the forensic accounting includes: first is the initialization and mandate. Second is the develop the plan. Third is obtain relevant evidence. Fourth is perform the analysis to, connect the dots. Fifth is the reporting, and sixth is the court proceedings. This is how whole the forensic accounting is done. Any doubt till now?
No, sir. Thank you.
Yeah. Okay. So once you perform the forensic accounting, okay, you by these steps, okay, then you prepare, and the step number 5 is preparing a report. Even I will talk about one more area, that is a forensic accounting and investigation standards. Okay, forensic accounting and investigation standards. So there are forensic accounting investigation standards issued by ICAI. Okay, like again, the way we have AS, the way we have SA, the way we have a standards on internal auditing, we have a standards on forensic accounting and investigation. Okay. So there are, 100 series about the nature of engagement, fraud, risk, laws and regulation, hypothesis, 200 series on the standards on engagement management, 300 on the executing assignments, 400 is your specialized area, 500 is on reporting, and 600 on the quality control. Now, when it comes to the reporting part, okay, there are few things that we need to take care of, like, as mentioned in the standard 500 series, okay, 510, that is reporting results. It says that there are certain elements that should be present in your report. For example, title and addressee, okay, TA, then scope and objective, okay, approach taken or undertaken to do the forensic accounting engagement. So approach, okay, a summary, executive summary, then reference of the expert wherever you have appointed an expert, and wherever the expert has issued a separate report, so and you are relying on that report, so reference to the expert. Okay, the fact that these assignments were conducted in accordance with FAIS. Okay, so you can say FAIS reference, list of findings that is supporting your analysis, assumptions that you have taken, and the conclusions. So this is how you need to structure your forensic accounting report. Okay, title, addressee, scope, objective, approach, executive summary, reference to the expert, reference to the FAIS standards, findings, assumptions, and conclusion. And this is required by FAIS 510. Okay, this is you should prepare your forensic accounting report. Any doubt till now? Any doubt with respect to the whole chapter of due diligence, investigation, and forensic accounting? FAIS is nothing but forensic accounting and investigation standards. Clear? Any doubt, guys? Okay. If no further doubts, so that was for the chapter 17. Okay. Investigation, due diligence, and forensic accounting. Let's proceed to the chapter number 18. It's very interesting and very new chapter on the ESG side. Now, when I talk about ESG related scenarios, okay, basically it is kind of, what is happening in the ESG is critical to understand in India. Okay. Rather than, having, like, we will not go into the details of the BSR, BRSR reporting, IR reporting, but it's important to understand what is happening in ESG. Okay. What is the critical elements or aspects which are involved in the ESG reporting in India and across the globe? Okay. So let's understand this first with a case, with a question. The landscape of environmental, social, and governance reporting and the considerations has evolved significantly in India over the past decade. Discuss the evaluation and highlight the key regulatory developments, the role of Security Exchange Board of India, and the broader impact on the corporate practice and the investor behavior in the Indian context. So here you are required to discuss the evaluation and highlight the key regulatory development related to the ESG. So can anyone tell me what are the key, highlights or the evaluation regulatory development in India with respect to the ESG? Can anyone tell me that? Anyone? Like, what was the, evaluation phase of the ESG? What are the regulatory changes that are happening as of today? Anyone? No? Okay, I'll tell you. So how that the landscape has evolved in India. It started with 2000, okay, 2000 to 2011, the first period. where ESG was introduced as a part of CSR, corporate social responsibility and initiatives. The companies were required to comply with the corporate social responsibility, expenditure framework, mandatory disclosures. With the amendment of Companies Act 2000, with the new Companies Act 2013, CSR came into picture. Okay. Then in 2011, government issued a national voluntary guidelines. So national voluntary guidelines on social, environmental, and economical responsibility of business. So they were known as a national voluntary guidelines of 2011. Okay. Government issued and MCA issued these guidelines. These guidelines provided a framework for companies to integrate ESG into their operations, reporting, and to adopt ESG early. In 2013, this CSR became mandatory. So mandatory CSR reporting started. Okay. With a 2% of their annual net profit, and the thresholds were there. Okay. So CSR something started, but CSR only focused on the as part of the ESG. That's a social part. Okay. Not the environmental, not the governance. CSR only catered the S of ESG. In 2012, meanwhile, in 2012, SEBI, okay, started driving the ESG initiative. So SEBI first issued in 2012 for top 100 listed entities BRR reporting. What was the BRR? BRR was a business responsibility report. So they started, SEBI started implementing BRR reporting for top 100 listed entities. Okay. Then in 2021, after 2013, directly come to 2023. Oh, sorry, 21, where SEBI initiated or SEBI replaced the BRR with BRSR reporting. That is the business responsibility and sustainability reporting. Okay. They were aligned with the global framework like GRI and SASB. What is GRI? That's a global reporting initiative, and the SASB is the sustainability accounting framework, basically. So they are on. They are the sustainability reporting frameworks, and that was made mandatory for top 1,000 listed entities. Okay, top 1,000 listed entities comply or explain basis. Now, in 2023, SEBI introduced a BRSR core. Okay. Then 2023, SEBI came up with BRSR core. What is BRSR core? BRSR core is nothing but mandating ESG disclosures and assurance requirement. Okay. For top 250 listed companies. That is mandatory disclosures and assurance requirement for top 250 listed entities. Okay. This was the step to standardize the ESG reporting. As a result, in 2023, companies started to adopt ESG more rigorously. This is how the ESG has evolved in Indian context. Okay. And these were the key significant highlights that has happened till now with respect to the ESG in India. Any doubts? Any doubt, guys? Okay. Now, when I talk about ESG, this was an Indian initiative. These are something with respect to India. Globally, there are, GRI reporting, GRI, that is a global reporting initiative that is happening. There's a CDP happening, that's a carbon, disclosure project. There's a IIRC happening, that is an international integrated reporting framework. These are the international frameworks that are being followed, okay, for the purpose of, ESG reporting. Even though, apart from this, okay, there is a IISB, that's the International Sustainability and Standard Board. International Sustainability and Standard Board, which issued two IFRS S1 and S2. These are the two IFRS which has been issued on the sustainability part. Okay. So IFRS S1 is a general requirement for the disclosure of sustainability related financial information that is somewhere, applicable from the 1st Jan 2024. Okay. And there is a IFRS 2, that is a climate related disclosure that is, again, in the phase of implementation, which is also was started from the 1st Jan 2024, but it is still in the phase of implementation. So S1 is a general disclosure. S2 is a climate related disclosure. Okay. So this is something how the international scenario is working. Also, there is another mode of reporting when it comes to the ESG that is known as an integrated reporting. Which happens on 6 C's. Okay. Which are these 6 C's? Financial capital, then manufactured capital, okay, then you have a nature capital, human capital, then you have a social capital, and you have an intellectual capital. Okay, so this six type of capitals were there for IR reporting, wherein the companies were required to report on these 6 elements. What is their financial capital, from where they are obtaining the funds, okay, for the use of organization, for the production, okay, like that equity or on that part. Manufactured capital means like what manufacturing technologies, tools, building equipments that they are using. Nature capital, like what water, land, mineral, forest they are using for the purpose of manufacturing. Human capital is again related to the employees and that particular area. Social capital is how they are contributing to the society, community, group, stakeholders, other networks. And the intellectual capital is the IP that the company holds. So reporting on this 6C element became the as a known as a integrated reporting framework. Any doubt till now? Any doubt with respect to the reporting evaluation, how it is there in India and outside India? Any doubt? No? Okay. If no doubt, let's proceed to the next question. Okay. This is on, like, the Institute of Chartered Accountants of India has taken several initiatives to promote ESG principles practice among its members and the wider corporate landscape. Discuss these initiatives in detail, highlight their impact and the role of chartered accountant can play in furthering the ESG integration in India. So basically, what you are required to do is you are required to discuss the initiatives taken by ICAI with respect to the ESG. Can anyone tell me those initiatives? Can anyone tell me those initiatives? No, I'll tell you. So it started with, ICI constituted a board. That is, in 2020, ICI started a board that is known as a uh, Sustainability Reporting Standard Board, SRSB board. SRSB, that is a Sustainability Reporting and Standard Board. And the mission of the board was to measure and increase awareness. Okay, to to measure, to take appropriate measure and to increase awareness with respect to the ESG, integrated reporting, and the BRSR framework. So that board was there. Plus, ICI started certificate courses for its members. Okay, on sustainable development goals, BRR, integrated reporting, BRSR reporting. So these are the certificate courses there. Plus, ICI has issued, okay, standard or publications, like for example, SAE 3410. That is standard on or assurance engagement on greenhouse gas statements. So assurance engagement on greenhouse gas statement. So this is a standard on assurance engagement which was issued for this purpose. Okay. Then background material was also issued on BRSR. Material on BRSR reporting. Okay. Then ICI also created sustainable development goals for the accountant, like goal 125. Also, FAQs on the sustainability reporting was introduced. Okay. They also introduced sustainability reporting maturity model. Sustainable reporting maturity model. Okay. Version 1 and version 2. So that are version 2 is just recently released. So version 1 and version 2 is there for that. Also, there is an double SAE 3000 that is on the assurance engagement on sustainability information. That is still is yet to get implemented after March 2024. But there is an double SAE 3000 that is assurance engagement on sustainability information issued by ICI. So these are certain initiatives which are taken by the ICI in the field of ESG. Any doubt till now, guys? Any doubt? No. The last part, and one more question I would like to take is on the BRSR reporting. Okay. So the question is, the business responsibility and sustainability reporting framework mandates that the company adheres to the 9 core principles while conducting their business. Explain these 9 principles in detail, highlight their significance in promoting reasonable business practice and sustainable development. How these principles relate to the broader concept of ESG. So you need to explain about these 9 principles. You need to provide about these 9 principles. Can anyone tell me which are these 9 principles? BRSR reporting's 9 principle. So these 9 principles are categorized into ESG components of environment, social, and governance. Okay. Within 2 for the environment, 3 for the social, and 4 for the governance. So out of these 9, 2 are for environment, 3 for social, and 4 for governance. Total your 9 principles. Can anyone tell me about these 9 principles? No? Okay, I'll tell you. So these 9 principles stand for the first principle is ethics, transparency, and accountability. It talks about the ethics, transparency, and accountability within the organization. Okay. So entity structure, developing policies, there should be ethics, transparency, and accountability over there. The second principle talks about safe and sustainable goals and service. Means the service and the goods provided by the company should be safe and sustainable. The company should have a sustainable goal. Third principle is to promote well-being of all employees, including those in the value chain. Okay. So as the principle suggests, promotion of the well-being of employees. Fourth principle talks about the respect for the stakeholder interest and responsiveness. Basically, this principle aims at, the business should have discussion with all the stakeholders and understand their, interest, and accordingly, they should respond to their interest. When I talk about the stakeholders should not be only the shareholders or, regulatory entities, but the society is also now part of the stakeholders. Fifth principle talks about respect and promote human rights. Okay. Sixth is a protection and restoration of the environment. Protection and the restoration of the environment. Like the business should, the organization should conduct business manufacturing in such a way that it should protect and restore the environment. Seventh is on influence on the public and regulatory policy. Okay. That how the business should basically adopt and influence the good public and regulatory policies. Eighth is a promote inclusive growth and equitable development. And the last one is provide value to the consumers in a responsible manner. So these are the 9 principles which, the businesses and the organizations are required to adopt in their operations as per the BRSR reporting. And again, these 9 principles are again aligned to the Sustainable Development Goals issued by the UN. Okay. So this is how the, BRSR 9 principles are there. Any doubt till now?
Sir, Abrakesh.
Yeah.
How far, these principles or another ESG norms are in fact being followed by Indian companies?
They are being followed, so they are mandatory.
No, they are mandatory is okay, but more of on paper or in real life, because one or another day we just find that many social or environmental issues are there because of the company's action. For example, even government, not only company, for building a flyover, they cut the trees. Or not one or two, it's many. So how far these are, feasible, or reliable that we in fact we in fact following these rules rigorously.
See, I would say, we over here, focus on the reporting part. So actual followance or whether, company are actually complying or not, that is something, come up in the reporting. And what companies are doing, what is happening in the market, what is on the ground reality. I think it's a topic of another discussion. But see, when it comes to the reporting part, yes, reporting is happening, appropriate reporting is happening, and this is mandatory, so companies are required to report. But I would refrain myself from commenting on the
I agree.
Yeah,
I agree. This is for knowledge purpose only. I have not,
yeah, but I think it's a a discussion for
this
some
is
another
new for
day.
me. So this is a very new for, except CSR. All these concepts are new.
Yeah.
Thank you.
So yeah, sure. Any other doubts? Nope, no doubts. So this was for the ESG. Okay, chapter number 18. It's pretty simple, straightforward chapter. There is nothing much complexity involved. It provides the background history of the ESG, global some frameworks and the reporting initiatives that are being followed, how India involved with the ESG, how ICAI is supporting that ESG initiative. That's it. So this is some, something which is given in this particular chapter, and it's pretty straightforward. Okay. So this was chapter number 17 and 18 today. In the next lecture, we have a chapter number 19 that is on the Friday. The last chapter of the professional ethics, we will cover that chapter, with examples in a summary way, that the way we have covered till now. That was the last chapter for the particular for this November 2024 session. Okay. So if you have any doubt for any of the topic till now, you can please bring that particular doubt in that topic, in that lecture. Okay. We will take up that particular doubt and we'll try to resolve it. Okay. Plus, I request everyone to please go through the video lectures which are uploaded on the portal for the detailed, session or the chapter which is there, that is a professional ethics, before you come to the next lecture, so that we can have a good discussion on the topics. Okay. With this, if no further doubts, then thank you guys. Thank you for participating in today's lecture. I'll see you in the next lecture. Thank you. Yes. Thank you.